adjusting the volume.
Hey, it's Bill Gross, the LAProbate.com. Really excited today. One of the key parts of buying property, whether you're buying your own house or flipping property or investing in property, is the financing behind that. And I meet a lot of lenders, a lot of good ones, and unfortunately, a lot of bad ones. And I recently met Patricia Alejandro at the LA Grand Expo with some really interesting products I want to share with you guys. So I invited Patricia, and she brought on her colleague Duane. So Patricia and Duane, welcome to our call today.
Thank you for having us, Bill. Really appreciate the opportunity to talk to you. Just to give a little bit of background about SecurityNational. It's a company that's been around a while, since 1965, started as a life insurance company. In 1993 is when the mortgage side of it was born. And ever since then, we've been one of the top 50 mortgage companies in the nation. Going back to the life insurance business, thanks to that, we've been able to basically
fund some of our own transactions and do some specialty lending, non-Fannie, non-Freddie, jumbo stuff. So our insurance division has billions of dollars that they collect 0% interest on. And so they said, well, why don't we lend that out on some high-risk transactions, but we create the parameters that would not be friendly to Fannie or Freddie. And so that makes us one of the more unique mortgage bankers in the country. I was joking at your event that we make loans to pimps, prostitute, drug dealers, candlestick makers, and bakers. And in all sincerity, we have what is called our lifesaver loan. 25% down. We'll give anybody $1 million to buy a single family, 2, 3, or 4 units. You only need a heartbeat and a 500 FICO score. So our 3 requirements are a copy of a driver's license, a social security card, and a bank statement. And it's not a 30-year fix, but it's an interim loan for fixed for 5 years at 5.99. But we've helped a lot of people transition to acquire some property, figure out long-term financing options as to what they want to do. But here's how that could work in the greater Los Angeles area in a unique marketplace. The first and foremost, we have a lot of people, with no disrespect, that may be working on businesses here, but may not have a social security or papers. And I always say that I work with a lot of individuals that are self-employed and don't have papers here in the greater Los Angeles area, which is no surprise. But they've got tremendous amounts of money in the bank from self-employment. And I say, even if you don't have papers, you can give to any one of your relatives a gift of 25%. Go out and find yourself a single family, 2, 3, or 4 units for up to $1 million. We'll also make exceptions, but our bread and butter is the $1 million threshold. And I'm just saying we could probably go higher on this particular product. Maybe $1.5 million might be where the company wouldn't want to do anything further. But I was just sharing with Patty, I closed a loan in Idaho. I posted something funny on Facebook about that loan, and a couple people said, what the hell? A lady called me. She bought a vacation home in Idaho. She says, I don't want the IRS. I don't want to submit to tax returns to a lender. I'd rather pay 1.5%, 2% higher. And I actually just closed it 2 days ago. I posted on Facebook in Idaho. And so there's always a place for it. I've also helped individuals that were elderly in age and were equity rich with the same refinance, but didn't have the assets to get a loan. And so that's our non-traditional. That's what kind of makes us unique, one product. But let's talk about a couple of other things that we do very well.
Well, let's hold on, because you just given us a lot to talk about here. So let me take it back a little bit. First off, when you talk about your loans are not Fannie Freddie, what I think you're saying is the vast majority of real estate today bought for a primary residence, somebody live in the house or refinance, those are loans are financed by the quasi-government agencies, Fannie Mae and Freddie Mac, right? And so people are familiar with those guidelines and requirements, and you're offering loans to people on terms that they wouldn't meet those criteria, but they could use a loan for other profitable or important financial purposes. That's what we're talking about, correct?
Exactly.
That is correct, but I don't want to misconstrue. We are a serious Fannie Freddie seller on our conforming loan limits. and our FHA transactions. We do thousands of those a month. So I'm just saying this is just a supplemental program that fills a niche. In addition to some of our bank statement programs, 90 to 3 million, which we can talk about in a moment, some of the other awkward ones that don't necessarily meet the regular criteria. But yes.
And then the product that, again, I was most interested in is the non-qualified. So 25% down to $1 million would allow somebody to buy property that otherwise isn't going to qualify. And they can use that for investment property, meaning like a fix and flip, or they're getting a property that's
okay. So
bad
it's
condition.
not necessarily for a fix and flip, but it's for somebody that wants to hold something for a short term, 3 to 5 years, more in design. It has to be habitable. It has to have the basics structure. It should have some integrity to it. We have some other alternatives for fix and flips, but this is just more designed, again, with no documentation. Our underwriting guidelines feels better knowing that the house is structurally sound. If it was a more of a fix and flip, they probably would want to know a little bit more information about the person acquiring the property.
Would it work for somebody who's buying it to do, let's say, a cosmetic rehab and or adding something else, adding an ADU or doing an addition? Would it work for that kind of property?
Bill, we're having a hard time hearing you.
Broke up a little bit, but
yeah,
with regards to, as you had indicated, so yes, anything cosmetic we can work around, but structural, no.
yeah, like
On that
major
particular-
repair, no. Like,
So,
How about, it sounds like it would work well for an inherited property, like a probate, where the person has the chance to buy the property, might not qualify by normal standards, but they bought it, sat on it for 2 or 3 years, made the payments, they're getting it at a big discount, then maybe they can refinance 2, 3 years down the road if they're making their good payments and such.
yeah,
Absolutely. As I've said, it's solved a multitude of problems. And a lot of times when we have new people in business, they've only got a 1-year tax return and they're a year away from showing some substantial stability. And I say, this is the perfect loan to help you to transition from point A to point B. So it sounds funny, but it's really helped a lot of people transition as they're developing in their business or adjusting their tax returns 12 or 24 months out.
Right, because for tax return qualifying, you're going to have to go back 2.5 years or so, right, to file the prior year's return, so April or later, and then 2 years back is 2.5 years. If your income's skyrocketing, you can always afford more than you can qualify for, and this might be a way to get a really good deal and hold on to it and then refinance down the road.
Yes, that's correct, sir.
Okay. So, so I understand the 25% purchase loan. Let's talk about what might be available for more of an investor on the property needs a little more work and they're going to buy a property to fix it up. Do you have financing for fix and flip? Do you have different programs?
We do have financing for fixes and flips, but it would be more of a standardized scenario. So I wouldn't say we would have a competitive edge, but we would have a product. And ours would fall in guidelines with all the other traditional people in that space at this time. So
what's the most common scenario then for 25% product? What's the most
Let me
common
close the door
scenario?
1 second, sir. My apologies. Go ahead.
What's the most common scenario that 25% product is used for?
Okay, you're asking what's my most common scenario with the 25% down our product?
Yeah, the buyer of that product or the borrower of that product.
Well, okay, so we can talk about a number of buyers. As I was saying, a lot of primarily self-employed people who have either filed recent bankruptcies or had a foreclosure. We'll take a 500 FICO score, sir, 100% gift. It's out of the country people, resident aliens, illegal aliens, I-10 people. So it's a variation that where they're missing some of the primary day-to-day activities that would justify a full doc type of loan. Holes in employment history. There's just a magnitude or a wealth of individuals who struggle. As I said, it's primarily a self-employed person who's making a shit ton of money and does not want the IRS to know. They're more comfortable with that particular loan product. They'd rather pay more on the mortgage than on the taxes. That's my primary target market.
So aliens, foreigners, they have a FICO score 500 or more, driver's license, and 25% funds. then we're able to do something.
It's the most easiest loan in the world, as I was saying. And if they don't, again, if they don't have a social security number and don't have an established FICO, they can give 100% gift to their friend or family member that they trust to be the primary borrower. We only need 3 pieces of documentation. That's a bank statement from a gift donor, a driver's license, and social. We don't put it, it's not a stated loan, and we don't put any job or any income, and we don't run a 4506. So the completely, it's safe.
And again, for those who don't know, the 4506 is an IRS form where lenders will often have the borrower fill it out, and then they'll compare, they'll get a copy of the transcript of the tax returns, and then they'll either approve or not approve the loan based on that. And so Duane,
So we've eliminated that in its entirety.
Well, it's really fantastic. So if people wanted more information, how do they get a hold of you guys?
I would suggest that you call Patty here, and we meet 3 different ways. We have a COVID compliant office, number 1 in West Covina. Number 2, we can meet via Zoom, or we'll drive out to a restaurant or a coffee shop in the community and discuss their particular challenges. We have a little foundation called HOPE, Home Ownership Preparation and Education. And what we do in that initial meeting is, number 1, if they have a low FICO, we help to increase their FICO, and we do the necessary things to get a decent FICO. And we do free credit repair for up to 2 years. So that's our number 1. Number
Nice.
2, if they're challenged financially, we find a way we as a lender can pay some or all of their closing costs. And the 3rd leg is we actually do counseling with individuals. And so we explain the whole process with regards to as if they had went to a credit counselor. And so we make sure that they have the total complete wherewithal, understanding, and comprehension of what home ownership is. We do that totally for free. A lot of institutions charge $1,500 to $2,000 to do that. We would rather have a loan and work with a client and build a relationship and have a rapport with the realtor referral partner than to pay an outside institution to do something. And so we get a chance to build a rapport with that client and create a client for life. It's called HOPE, Home Ownership Preparation and Education.
So Patty, will you give us your phone number so someone to reach you? How do we get a hold of you?
Yes, my number is 323-243-2224. That's my cell.
Oh, great. I had that number, so I didn't realize that was when you would get out. And then to reach you via email will be patty.alejandro@snmc.com for
Right.
Security National Mortgage Court.
Yes.
So look, guys, I really appreciate you guys being on the call. And then we from time to time have a chance to promote you on our real estate investing zoom.com. So I want to thank you for your support. People are interested should call Patty, get connected either on Zoom at their office or here locally. And then you may see them from time to time on my call as well. So guys, thank you so much for your time today.
Thank you so much. Appreciate it.
Thank
Take
you.
care.
Thanks, Bill.